Hey everybody, welcome to Mortgage Today for Wednesday, August 28th, 2024, and oh, what a day it was. UMBS opened the day flat on the morning. S&P futures were down 5.25 points. U.S. equities edged lower ahead of key earnings releases from Nvidia Corp, a $3 trillion stock at the forefront of the global artificial intelligence frenzy. Consumer confidence increased in August according to the Conference Board. Consumers' assessments of the current labor situation, while still positive, continued to weaken, and assessments of the labor market going forward were more pessimistic. This likely reflects the recent increase in unemployment. Consumers were also a bit less positive about the future income. Average inflation expectations fell to 4.9% for the next 12 months, the lowest reading since March of 2020. There were no economic releases today, but the Fed officials, Waller and Bostic, were both scheduled for speaking engagements. The market is looking ahead to tomorrow's initial jobless claims and GDP revision. The market is looking ahead to tomorrow's initial jobless claims and GDP revision, as well as a fresh round of PCE inflation data on Friday. The Fed continues to monitor economic releases as we move towards a September meeting and first expected rate cut. During Powell's recent Jackson Hole speech, he repeatedly said that the labor market is weaker than pre-COVID, when Fed funds were 1.75%. Currently, markets are expecting a terminal Fed funds rate of 3.25%, with 100 basis points in cuts through December and another 100 basis points in calendar year 2025. 3.25 seems improbably high, as the neutral rate is maximally 2.75. By invoking pre-COVID times, Powell is hinting that the terminal rate may well be lower than the markets expect. While it makes riveting analysis a challenge, it's not necessarily a bad thing for the bond market to be incredibly boring sideways right now. After all, we've had a stable run of rates near the long-term lows for several weeks. Volatility could creep back in with the upcoming economic reports, but today it was nowhere to be found. Bonds started slightly stronger and drifted slightly weaker throughout the session, with MBS not even an eighth of a point away from yesterday's latest levels for the entirety. Data relevance increases sharply on Thursday with jobless claims and quarterly PCE via GDP. UMBS ended the day down 8 basis points at 100.94. So when we look at the charts, 100.94 is still up here in the top of the range, though it is kind of narrow range. Once again, ceiling at 101.18, floor down at 100.79. In terms of things you can't control, check out this post from our sponsor at wellthatmakesense.com. This is from the fantastic book Persuasion by Robert Cialdini, who is the grandfather of all influence studies. Persuasion is about how you can set up the situation and set things up to be more influential with your customers. So check it out at wellthatmakesense.com.